Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the dollar, miners, and gold. So we have the dollar continuing to the upside ever since we broke this lower high pattern. We have a bit of a double top at 101.76 and 101.72. The bulls have really responded and continued strong to the upside. So the next resistance we're looking at is 102.52 and then up to 102.95. So the dollar bulls are currently in control. On the weekly time frame, we see that they have a nice strong follow-through week, getting back over the 10-week moving average resistance and really looking back up at those 13-year highs now that we have a really solid base of support. 99.43 held 2 attempts, and the bulls responded with a month of green. And this week is certainly stronger than the previous 2 weeks, which had upper wicks of profit taking, a bit of indecision. Not so much this week, although we do still have one trading day left to go. So how we entered the day today, we had another scenario. Yesterday we had the RSI at 30 on gold, and we were looking to the upside, and we got a really nice oversold bounce for 5 hours in gold. So heading into today, we had the RSI at the same level, and we were looking for the same scenario, looking to the upside, looking for an oversold bounce. So we saw a bullish reversal candlestick, didn't get follow through. We got an inside candlestick. There's our bullish follow through. So that had us looking for bull miners to see some upside. Now the first red flag was when, if we look on the shorter term time frames, we had JNUG specifically hit the 790 and 789 level 4 times. Pre-market, it hit it 3 times, and then once during regular trading, and it was unable to get over that quadruple top. So obviously, if the bulls can't break to higher highs on the 5-minute time frame, that shows that the bears are in control. And the big red flag occurred to me because gold was still heading to the upside as JNUG was unable to hit these levels. So JNUG hit these levels in pre-market, and then during regular trading, we saw gold move up multiple dollars higher than it was pre-market, and JNUG did nothing to break its lower highs. So that told us that we still had weakness, and of course, if JNUG can't break a quadruple top, then the bears are just going to be waiting to strike. And as soon as we saw this gold weakness, we saw no follow through on this oversold bounce. We only saw 1 green candlestick, couldn't even get 2 green candlesticks in a row. This oversold bounce yesterday was marked by higher lows and higher highs, 5 green candlesticks in a row. Today we got our first nice looking candlestick, rejected from the 10-hour moving average resistance, and then the next candlestick was a lower high and a lower low. So there's your big red flag right there on lack of follow through, and we are now seeing gold still in oversold positioning here and looking for another little oversold bounce to play out after hours. I'm watching this downtrend resistance line on the hourly time frame, very clearly hitting lower highs. We could bounce all the way up to 1242 and essentially see a $10 bounce to the upside almost and still be in this downtrend. So we need to see this lower high pattern break for the bulls to show that they have any kind of momentum to the upside. In yesterday's video, we highlighted how the bulls must confirm the bullish reversal hammer to see that confirmation and follow through that we're going to head back to the upside. And obviously that did not happen, so we negated the bullish reversal candlestick, and from here we're looking for the bulls to maintain a higher low. Must hold support is 1225.77 to keep this strong higher low pattern on the daily time frame intact. So all in all, again, gold is still in a nice uptrend. The miners have just magnified any weakness almost exponentially with just an all-out dump. Another red flag today for the bull miners. Look at this silver pattern. Really nice pattern of lower highs and higher lows on the hourly time frame. And look at this dump. That was an all-out bloodshed dump where anybody in silver bears made a ton of money, and the bulls obviously got crushed. So the daily time frame, I've been pointing out how silver is more bullish than gold time and time again. Well, here's today catching up with everything and giving back multiple weeks of upside in one all-out dump day. The volume wasn't even that high on that dump, but clearly the price action taking out 2.5, 3 weeks of price action support levels and losing the 10-day moving average support for the first time since the last major consolidation we had back down at 1662. So support for silver down here is at 1752, and obviously the bears catching up on silver. They did a good job of holding up for a couple days, but again, that move was magnified to the downside as the bears quickly caught up to what we are seeing on gold. So again, gold bulls still in a higher low pattern. The low of February 21st is the level we're watching. And if we look at these miners and how they have fared, what is the low of February 21st? Where were we? We were right here at 2412, and here we are 10% lower on GDX, not even leveraged. So not even a leveraged miner, down 10%, where gold is still forming a higher low compared to that level. So clearly the correlations have changed. We have weakness in miners being magnified. What also stands out? The volume. Bear volume on the dump, weak bull volume, decreasing bull volume on the bounce attempt, lower highs every single day on this bounce attempt. We have now seen lower highs 5 days in a row, and now the lower lows continue with another increase in bear volume, losing all moving average support, losing the lower Bollinger Band support, and it's just been an all-out dump with this bounce attempt being a weak oversold bounce because we couldn't even break the high of the previous day on Tuesday. So if support from here, I'm looking at a pretty critical support of 2156, and that's because if we break 2156, we're reaching a range where we moved very quickly and we didn't really establish much support on the way up. So 2156 and then 2098 would be the next level. So pretty much a 2.5% drop before we see the next support level. So the bulls really need to see a turnaround here. We're close to oversold on the daily time frame with this dump, and the weekly time frame, bulls need to rally tomorrow and hold the middle Bollinger Band of 2245 to give the bulls some kind of hope heading into next week. So that's the level, the goal for the bulls, 2245 by the end of the trading day tomorrow. Otherwise, we've got this 200-week moving average of 2174, but what also stands out is this big spike in bear volume. So we are clearly seeing a change in the trend in terms of the correlation between the dollar, gold, and the markets, and how that dictates what the miners are doing. This was an all-out dump seen in high share volume, lots of people exiting their positions, and that can be, again, partially due to earnings, partially due to anticipation of what's going to be happening here in the future, but whatever it is magnified, significant bearish downside on the miners compared to what's going on in gold. So GDXJ, same kind of thing. Look at the bear volume compared to the bull volume. It's not even comparable. We had 2 days of a bounce attempt, which even formed a lower high, same thing. And those 2 days of volume don't even equal that one dump day of volume. So let's just add it up here. 61 million of bear volume plus 48, we're looking at 110 million bear volume compared to 50 million bull volume. So over 120% of the amount of volume in the past 4 days has been bear compared to bull. So here we are closing down at the low. The key support here, I'm looking at support of 34.16 and 33.25. And again, the bulls need a bullish reversal candlestick on the daily, but they need to confirm it. We didn't confirm it on gold. We didn't confirm it on the miners. And the weekly time frame, the middle Bollinger Band to hold is 35.59. And again, I've been saying it a lot, but it's the volume. We're going to see the highest volume week in GDXJ in over a year. The last time we had this kind of volume was an all-out bear dump in early November. Here's an all-out bear dump with 1 trading day left to go. It's going to be even higher volume this week, and the bulls need to hold 35.59, the middle Bollinger Band support. So the first 2 weeks of consolidation here, very healthy. Look at that volume. Decreasing volume, no red flags whatsoever, and just an all-out dump day. Everything changed on February 27th to shift the trend. And we had a little bit of a heads up on GDX in terms of losing the middle Bollinger Band before the all-out dump, seeing the bearish TCG cross. That occurred on February 21st, and then we lost the middle Bollinger Band, and then we saw that all-out dump. Not as much of a heads up on GDXJ, but same thing. We lost the middle Bollinger Band. We saw the bearish TCG cross of the 4-period exponential with the 8-period exponential, and then the all-out dump came the next day. So ideally, everybody that was in a bullish position at this point, unless you're looking out years, or, a year plus, ideally everybody would have been stopped out by now. And that's just because of this all-out dump. If you haven't gotten stopped out, that means you didn't have a stop loss in place, and that really puts you in a bad holding position. So hopefully we learn from those lessons and everybody gets burned not putting a stop loss in place at first. It's the good traders that learn from their mistakes and don't make them again. If you're continually repeating the same mistakes, it's really not going to end well in terms of a long-term trading success. So bears are in full control. Gold is due for an oversold bounce. We'll see if that plays out overnight. We'll have to see where we enter the day tomorrow, and we'll be looking to see if we can end the week keeping these bull miners with their middle Bollinger Bands on the weekly time frame as support. So I appreciate you watching. We'll check back in to wrap up the week, and I will see you over the weekend.